Hello everybody, Backyard Bullion here, and welcome to another precious metal ramble about something a bit different, Gold Royalty. This is the company Gold Royalty who have sponsored today's video. There's a link down in the description below for all of the information, not only about the sponsorship, but about Gold Royalty as well. It's actually really interesting, very different to some of the mining corporation videos that we've done in the past. Of course, now focusing on royalties, and the business model there is something that's very different, very interesting, and a way potentially to invest in a precious metals oriented company, but with a lot lower risks, because at the end of the day, it's all about the royalties, not about the humongous costs of exploration, research, development, etc. So we're going to have a look about them. There's information to share with you all here from a really interesting presentation that was given by David Garofalo, and I'm apologizing in advance if I've got that pronunciation wrong, who's the chairman and CEO of Gold Royalty. And he's got some really interesting things to say. This is a 20-minute presentation. We're not going to go through it all, but I want to share a few snippets which I found very, very interesting. And the first is him talking about the markets for gold and why things are poised right now for potentially quite a big upswing.
Not unlike past interest rate cycles when gold has done extremely well. Yes, nominal rates are going up, but they're not going up nearly enough to tame inflation. And there's a very simple reason for that. The debt to GDP levels are at historic highs, 350% on a global basis. If we look at the last big inflation cycle that we experienced, and some of us, in this conference remember that, it was in the late 1970s, and inflation reared its ugly head and went to double digits, and we saw a Federal Reserve that was willing to raise nominal rates well in excess of inflation, because they certainly had the scope to do so. Debt to GDP levels were only about 100%, much more sustainable, much more manageable for governments. U.S. debt service in the last year has gone up 100% to about $1 trillion a year. One out of every $7 raised by the federal government in the U.S. is going to debt service. And that's with a relatively marginal increase in interest rates to this point.
So I think that speaks volumes. I've been talking about this kind of topic on my channel for a long time, and it's nice and actually quite refreshing to hear somebody who's obviously got a vested interest in the world of gold and gold mining, and of course, CEO of a royalty company. He wants gold to do well. The better that gold does, the more royalties he will get. But it's very grounded viewpoint there. There's no conspiracy theories. There's no anti-Fed, statements and sentimentalities there. It's very much, look, we're in this situation where there is a lot of debt, and historically gold has done well, and now is a time where we think gold will do very well, and that is, I think, great. And one of the things that we will just focus on here on the right hand side of this little presentation, which he's giving a presentation from his company presentation here, is that there has been this huge cost increase, this inflation of costs for all of the different elements that go along with mining gold. And that's something that you are insulated from if you're a gold royalty company or a gold royalty investor. You don't have to worry about those R&D development issues and all of those costs and exploration, which I think is quite interesting indeed. Now, David's got an awful lot more to talk about in this presentation. There's a few key points that I want you guys to hear him say, and then we'll jump in and just give a little bit of an analysis of our own.
You can imagine what would happen if they really started to raise interest rates dramatically. It would bankrupt governments, certainly in the emerging economies initially, and then it would put the U.S. government at risk as well. We're not in a position in any of the developed countries in the world to repay debt in a fiscally responsible way. So there's only one way to deal with those debt levels, is to inflate it away. And so we are.
That's another fantastic point as well, just to round out this first section of the video, that inflation is something that actually governments want because of the amounts of debt they've got. They've got to manage it well, though, because otherwise you, of course, end up with a spiraling rate of hyperinflation, which is very damaging. But inflation at these levels is actually not necessarily a horrendously bad thing, which is why you're not seeing these huge interest rate hikes. But there will still be more interest rate increases to come. It's when that starts to wind down that gold will really start to see some quite big gains.
So if you believe in gold as an asset class, then you have to ask yourself, how do you best play it? And look, I've been building mines for over 30 years. I've been operating mines, and I've deliberately positioned myself in a royalty company because, like many of my management board, foresaw the inflation cycle that was to come after many, many years of excess post the credit crisis and monetary policy. It was inevitable that this would happen. And the best place to be positioned to get maximum leverage to the gold price is in the royalty and streaming space, where you provide that top line exposure to investors while insulating them largely from cost inflation.
So that, I think, is the kind of key point here. You know, there's some smart plays, some smart moves going on, as you can see from this chart. If we just maximize the screen here, you can see that there has been this huge growth relative to, you know, the mining companies' returns and the actual gold price movements here for the royalty companies. I think he's right. I think there is this appetite right now for, you know, having protected investments in terms of the gold liabilities and the gold market liabilities that come from exploration, R&D. Bringing it out the ground is not cheap, and it's not going to stay cheap. It's going to get more expensive. But of course, there is going to be this counter argument, which I'll put in here. I mean, I'm no expert, and this is, of course, not a financial advice video, but you know, as gold price goes up, there will be more companies that are more willing to take gold out of the ground. Of course, the higher price they can get for the material might outweigh the increased costs of exploration. So definitely something to factor in, that this huge sort of margin that you see here that's grown, this 108%, might tighten a little bit if the gold prices go up. But the good thing is, if gold prices go up and more gold comes out of the ground, more royalties come to these royalty companies, which is, I think, really quite a good business model. In fact, it's one of the best kind of business models out there.
The beautiful thing about our royalty portfolio, as it is for many of our peer companies, is our royalties are completely bought and paid for. We never have to put another dime into them.
That's quite an important thing as well. You do often find with exploration portfolios and mining stocks that you have all these wonderful headlines of how many ounces of gold are forecast or potentially in the ground that are going to come out the ground. There was some big news from, I think it was Central Africa, wasn't it, a couple of months ago, about humongous potential amounts of gold, but that's not coming out of the ground for decades. And even if it does, it's going to cost so much to explore and research and get out. But with a royalty company, you have that upfront cost, and barring a few incidental costs along the way, that's pretty much it. And you just then sit back, and it's like being a landlord. You sit back and get a rent. They say being a landlord is one of the easiest jobs out there. There's some complications, of course, with everything, but it's a good business model to have.
And so even if there are cost overruns, all we care about is the ounces coming out of the ground and us getting our share of that gross revenue. And that's why over a long period of time, you've seen royalty companies vastly outperform the commodity. They provided that leverage proposition and vastly outperform the operating companies that unfortunately are infected by cost inflation, just like every other industry in the general economy. So the opportunity as we see it within the sector, the subsector of royalties, is the opportunity to create a mid-tier champion. And there really isn't one now. There are the mega caps on a relative basis, Franco, Wheaton, and Royal Gold, who are large cap, trading at significant multiples, and deservedly so. They have blue chip portfolios. They generate massive amounts of free cash flow. They pay great dividends. They have great assets within those portfolios, and they have critical mass, which generalist investors are looking for as they dip their toe in the market and play gold in a more low-risk way. And I would say largely the rest of us are small cap. They're sub $2 billion, and frankly, we lack relevance. We don't have the scale to capture the generalist's imagination, and that's why when we launched this company a year and a half ago, we went about starting to consolidate the space, and some of our peer companies are doing the same, and we welcome that. I think what we lack in this industry right now is that mid-tier, $5 billion-ish market cap company that's big enough to matter to institutional investors, but small enough to grow meaningfully. And I would say the one Achilles heel in the large caps is their inability to grow dramatically with any individual royalty acquisition. They can't move the needle. It's hard to imagine a Franco delivering a 10-bagger to investors. It's much easier for this other collection of companies to deliver that kind of value proposition by achieving that critical mass through consolidation and through the acquisition of accretive opportunities.
I think that's a really interesting point, because you know, any big corporation, any big organization has, of course, got its existing portfolio, and any small acquisitions are just, as you said, not going to move the needle. With a new company, with a new refreshing look and feel to any organization, I think you will perhaps get this movement and this growth return. Risky, of course, but as we've talked about, there is a lower risk yield for this kind of business model. So we're going to leave David there in his presentation. As you can see, there's a whole bunch of extra talk that he's done on this Gold Forum presentation. It's a really good listen, and I'll put a link. You can see it's here. There's the link up there, but you can click on the link in the description and go and watch the entire thing. I do want to just jump over into their corporate presentation for a moment, though, and just come down here to the next couple of slides, because it is interesting to see how much potential there is for this kind of company. You know, the acquisitions of this stuff, of these royalties, is interesting in its own right. It's a different business model, but also with the way that the market's poised right now, with the fact that we've had gold at a very big high in 2020, 21, and now down $300-400 an ounce, there is this potential uptick that's going to come. We're already starting to see the turn. Perhaps we're at the bottom, and there is now going to be this drive for more potential exploration going forwards. And the projected future growth that Gold Royalty, I mean, I've not done specific research into their books and what their projects are, but with over 200 royalties, they will have an increased amount of revenue coming in. And I think it's poising them into a really good position to actually grow as a business and grow even further by potentially acquiring more royalties. So David's key point there is trying to grow into this sort of mid-tier company, maybe to outstrip some of the other smaller organizations there. Is there potential for that? I don't know the market well enough to say, but it does at least get me interested. And I think this has been a lot more of an interesting sort of look and feel to one of these types of videos where we talk about a particular organization than some of the others. And I'm always one for a little bit of a gamble when it comes to investing. You guys know me, if you've watched me for long enough, I have many times talked about the different proof coins and risky investments, and I am always willing to look to take a little bit of a risk. And something like this, I think, is one of those slightly lower risk options. You know, we've got very interesting business models to think about and factor in here, and of course a lot of really good and interesting metrics for the gold markets right now. I think the key thing is of course talking about the huge potential that gold will have into the future, where we've got, as David said right at the start of the video, the humongous debt levels that is out there, and that is quite scary. The last thing I do want to sort of mention here is that their team, I mean, David looks like he knows his business. You know, they're talking about 400+ years of collective mining, relative experience, and all of the different, you know, things that you can bring into an organization. And they've got some key people here. We know and have seen Amir Adani before. He's founded and is CEO and president of the Uranium Energy Corp, which has had triple-digit growth. You know, there's a lot of interesting and very experienced people here that are, I think, able to drive things forward. So it's definitely one to watch. I mean, invest at your own risk is what I will always say. You know, they're on the New York Stock Exchange. There's the ticker symbols. You know, I mean, their share price has gone down in a year because the gold price has gone down considerably in a year. I think that it will potentially uptick again. And this is a very young and fresh company with, I think, a pretty good experience record in the people that are there, and the business model, I think, is a sound one. So definitely worth thinking about. Now, of course, this is not a financial advice video. I do hope that you will all go and do a lot of due diligence. You can see a lot of their information up here. You can go and find their corporate presentations and everything that you need from stock information, financial reports, and everything. So go and do some thorough research before jumping in and buying, but it's something maybe to have a look at if you're in the market for a small little dip your toe in the market type situation. Otherwise, that is it from me. Thank you again to Gold Royalty for the opportunity to give them a little bit of focus on our channel. And if you are interested, all the links are down in the description below. Otherwise, that is it from me. Thank you to all my Backyard Bullion Rambling Society members who have stuck around and watched to the end of a video. You're the cool kids club, and I really appreciate it. Otherwise, let me know your thoughts down in the comments, hit the thumbs up, and subscribe if you've not subscribed already. That's it from me. Thank you one and all for watching. We'll see you on the next video. And as always, please make sure that you like, share, comment, and subscribe for more.